Why would the most powerful financial institutions on earth need the ability to quietly swap cash for physical metal without the public knowing their cash reserves are shrinking? Most people spend their time listening to what the too big to fail banks are saying about the economy. And by doing so, they're walking right into a trap. I'm Kenneth Mraz with Zang International, strategy specialist. And my focus isn't on what the institutions say. My focus is entirely on the architecture of what they're actually doing, particularly with their own balance sheets. In July of 2025, there was a quiet protocol shift in the global banking regulations known as Basel III Endgame. Most people thought it was going to be this massive event that was going to lead to the contract price of gold to sharply rise, but it kind of just fizzled out as some accounting noise and no real change in the spot market. But what it did do was create a massive anomaly. Under Basel III, physical gold was reclassified as a Tier 1 asset. What does that mean in plain English? It means a major bank can take the cash on their books, swap it for physical gold, and legally report a 0% change in their risk-weighted assets. To the regulators and the public, the balance sheet looks exactly the same. But the reality is, they can now trade dying dollars for physical gold. And I mean, look at the name, Endgame. What are the people over at the BIS trying to proclaim? That we're in the endgame of the fiat life cycle, maybe? This begs a very specific question. Why would the most powerful financial institutions on earth need the ability to quietly swap cash for physical metal without the public knowing their cash reserves are shrinking? Well, what if they're executing a stealth exit? If a bank holds $40 billion in cash, they're betting that the current currency system survives intact. But the insiders of those banks probably know that the fiat currency isn't dry powder. It's melting ice. They're quietly moving out of the melting ice and into the one physical asset that survives a systemic currency reset. This is the difference between sitting on the deck of a cruise ship and securing a lifeboat. Most of the public is focused on the cruise ship, interest rates, stock market returns, and the yield on their cash that they've already lent out to these institutions. They think the ship is fine because the music is still playing. Meanwhile, underneath the deck, the banks themselves are quietly unhooking the lifeboats and they're piling themselves in. They're using your wealth, the cash that you legally lent to them that's parked in their system, to fund their own physical survival strategy. When a currency reset hits, the bank simply deploys the lifeboat. The public goes down with the ship, realizing that their life's work was tied to a currency that the banks had already abandoned years ago. Now, why would these too big to fail institutions need to sit on gold to begin with? Let's look at their total known exposure to derivatives versus their assets. So this data comes directly from the Office of the Comptroller of the Currency, from the most recent quarterly derivatives report. You can see on the left the total assets that the institution has, and on the right is their total known derivatives exposure. Now, we can talk about how this known value isn't even close to the real value, but that would be a video for a different day. Regardless, you can see how highly leveraged these institutions are. When the banking system finally breaks and the reset is underway, these banks would be in a position of the ultimate bail-in with their bullion reserves. The government can ask them to hand over their gold. The bank can be assured it won't have to cannibalize itself through the reset, and your deposits are still subject to being collateral damage to help fund their survival thanks to all these derivatives, which is why at Zang International, our sound money strategy is built on the cornerstone of gold that isn't a tool of corporate bail-ins or nationalization. The imperative question that you have to ask yourself today is this: are you building a strategy to survive the foreseeable economic outlook, or are you building a fortress that is invincible against the financial storm that we can't afford to be wrong about? Click the link in the description, scan the QR code on the screen, or give us a call to schedule a sound money strategy session. And until next time, be watchful.